Hi, everyone. I'm Ellie Wheeler. I'm with GreyCroft Partners. We're a VC in New York and in LA. We were founded in 2006 by venture capital veteran and pioneer Alan Patricoff, who previously had founded Apex, among various other things. So first I'll start with a little bit about me, then a little bit about GreyCroft, and then kind of what we're looking at and really spending a lot of time in right now. Personally, I've spent about the last 10 years in various investing roles on both coasts and a small stint in London as well. And that's been at different stages in different places. So most recently, while I was in business school, I was working with Chris Sacca, who's an angel investor, micro VC, at a fund called Lowercase Capital. So I did that for about a year. Prior to that, I was at Cisco in San Francisco doing corporate development. So at Cisco, corporate development is actually M&A, venture, and strategy. I spent most of my time on the enterprise software side, specifically collaboration and video conferencing, as well as mobility. So I spent a lot of time working specifically with WebEx, which had been purchased right before I showed up. For whatever reason, instead of getting credit for having a lot of experience with collaboration software, I really just get in trouble every time WebEx doesn't function at our office. And prior to Cisco, I was at Summit Partners, which is a growth capital private equity firm in Boston, which of course I went to directly after having dropped out of med school, which is a typical path. So I've been on the investing side the whole way up. Now GreyCroft, we're a little bit different, so we're focused on digital media. And digital media was one of those terms in 2006 that was relatively narrow, and now it's 2012 and it's rather broad. And the sectors that we spend a lot of time in are it's content, it's commerce increasingly. It's also commerce services, marketing services, SaaS. But we're not afraid of content, as I said. So content in that bucket is also gaming and it's video. And a few things that are actually pretty different about us is our approach to the investing process, which is we don't have a minimum ownership percentage. We don't need 20% of a company. We don't have a minimum investment amount. We can be pretty flexible on that end. We don't take board seats. We don't need board seats. We will if asked, but it's not a stipulation in any deal. We will always have a formal board observer role. Those things all work together along with the fact that we always syndicate. So it will be us and another firm in any round that we're in. Those things all work together so that we can be very kind of entrepreneur friendly, so they can put together the best round with the best people that they want to do. And we can be very flexible on a lot of terms. It also helps us be very collaborative and cooperative with our syndicate partners. Sometimes they may need things that we don't necessarily need, and therefore we can be pretty flexible. We've co-invested with a lot of the people that you've seen up here already, and a lot of the people that you're going to see later today. Great. Other things that we're talking and spending a lot of time on right now, mobile and all things mobile. So I'm specifically thinking a lot and spending a lot of time on mobile commerce and really mobile commerce infrastructure and mobile commerce services. So what's going to enable the next wave of mobile commerce? And we're also spending, as similar to what Dave was saying, a lot of time in video. We have been very involved in video on the web. We're in Maker Studios in LA, which is kind of the largest independent network on YouTube. And I think there's still a tremendous amount of opportunity. So yeah, I didn't tell you that we are actually Series A investors for the most part. We do a little bit of seed, but really we're Series A. And we'll invest anywhere from 500,000 to a few million is our ideal. But thanks.
Great. Thank you.